Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Wednesday, May 31st, last day of the month. Monthly close will be today at 5 p.m. Eastern. So something to look out for there. I'm sorry, 8 p.m. Eastern, 5 p.m. Pacific. Apologies, got my time zones mixed up there. So monthly close will be today. That will be relatively important. We're going to go ahead and go over that in a second. But if you've been reading the daily crypto updates that we send out to the TTC members, and if you're not, then you should sign up for TTC and get those emails. We've been talking about DXY a lot. And we obviously go over it here. It's continued higher, clearly at the detriment of risk markets recently. And we've been mentioning, anytime if we see a strong candle, we are expecting a reaction, a negative or bearish reaction from risk. And that's pretty much exactly what's happened here. So hovering around the 104.5 number, that was above the recent high from Monday. Hovering above that, likely to continue to move higher. But if it breaks back down below 104.5, it'll probably grab that 104 number. So if we drop a little bit back down here, probably getting some relief from risk. If we continue to grind higher into tomorrow, probably see risk getting hurt a little bit more. Now, remember, we do have the allegedly the debt ceiling vote today in the House. So if that gets passed through the House, maybe markets react euphorically. I mean, we're sitting on top of support, pretty decent formation, but we're still underneath the 1 hour estimated 200 moving average for S&P futures. So very, very important to consider context. If we can get above that 1 hour estimated 200 moving average, maybe that coincides with around the vote time, then that is potentially a bullish catalyst and can launch you potentially back up to that 4,200 level, or at the very least, these lows right here. So always important to consider, when you're looking at, bounces. You've got, resistance, natural resistance here, 1 hour estimated 200 moving average, and then these lows will act as resistance on the road to 4,200, which coincides with this little wick right here. So, always important to remember what happened in terms of recent price action, but this is a good reversal pattern if you are bullish and believe that the debt ceiling news will come out in a bullish fashion. So moral of the story here is 4170 is the line in the sand. Break below that, obviously no confirmation below this morning. Break below that and move down to 4145, or hold 4170. And the first target would obviously be that 4180 number. If you can get above 4180, then you can start tackling these three targets, in my opinion. So looking at Bitcoin, a little bit similar to equities, but we're not really sitting on the most ideal supports in the world. It is 27K, and it does kind of coincide with this high from before. But zooming out, no real good trend at this area, which definitely makes me a little bit more cautious than. And I'm sorry, I wanted to get rid of this and I ended up moving the whole chart. So this definitely makes me a little bit more cautious than it would be, but 27K right now is really the line in the sand. Confirm above 27K, likely grab this liquidity up here, which coincides with the 1 hour estimated 200 moving average. So that's around 27.2. Get above 27.2, then ride up to 27.5, and obviously get above 27.5, and you'll probably start to grab, this type of liquidity if you can make it up there. But obviously, long road ahead, and this does not look very enticing. I will say, big sell volumes, and a lot of times we will see, attempts at reversals, especially with nice buy volume coming through. But unfortunately, the knife catching system not very effective in this turn of events. Now, it still could end up being, positive. Let's say equities. Oh, there we go. Equities moved above the 1 hour estimated 200 moving average. So maybe we get a little bit of a bullish reaction from Bitcoin. But, moral of the story, again, get above 27K, talk about 27.2. Get above 27.2, talk about 27.5. Get above 27.5. Got a lot of room to roam up top here. So if we can get above 27 and confirm above, which it's, currently moving in that direction right now, then I'll probably look for longs after I get off this video with all of you. So looking at Ethereum, a bit similar, still sitting in this kind of mid-range area, in my opinion, but, still hovering around the 1 hour estimated 200 moving average, which is, obviously something we talked about on both Bitcoin and even equities. So all kind of hovering in this similar formation. So for the line in the sand this morning was 1857 for Ethereum. Get above it, or hold that. Then you can start talking about grabbing the 1875 level. Of course, coincides with this local high right there, from overnight. And then if you can get above that level, the 1875 level, then you can start talking about grabbing, right here, and potentially getting all the way up to here. But remember, you'll have this VWAP, this weekly VWAP to contend with if you can get above 1875. So worry about that later, but it coincides with these lows right here. So think about 1890 potentially as a first target if you can get above 1875. But, I will say, let's pull up the RSI here and see if there's any divergence. Yeah, so there's some divergence here, which is definitely a good sign for ETH bulls. Trend is going down on the price, but up on RSI. So that's definitely a good sign for the bulls, in my opinion. And of course, first target will be 1875. Get above that 1875 number, start to target 1890, maybe 1900. So RSI divergence, one of my favorite tools to use in my toolkit. Typically good, especially when it coincides with added support confluence, which would be the 1 hour estimator 200 moving average, bounce, deviation under, hold it. Typically, you will see it return to the 1875 number. So something to look out for there if you are a bull. And of course, again, the debt ceiling vote news could definitely coincide with bullish or bearish candles. So if you are bullish here, you like the technical formation, I actually think it's a pretty decent entry if you were to make a bet. Tight stop would be, I guess technically your stop would be down here at 1846, but you could probably get away with a stop around 1854, 1853 if you want to play it pretty tight. Talking about what's coming up for the week, we did have employment numbers. I don't know why it's showing up here, but they actually came in hotter than expected. So remember that, let's just look at the open for the US, right around 6, 7 a.m. for my time, it's 9:30 a.m. Eastern. We had a big, spike and then a drop, and that coincided with the ADP employment numbers, which basically show that the unemployment rate is likely not increasing as quickly as we thought. There's basically more employment numbers than expected. Remember, the Fed wants to decrease employment, to decrease inflation, to induce a recession. So anything that shows economic strength is obviously going to be interpreted negatively from the market. So that explains, why we got the dip today. We of course have, with not the ADP employment numbers, the job openings number. That's what I was looking for. So ignore what I said about ADP employment. I meant to say job numbers. Today is Wednesday, not Thursday. So apologies about that. We got the job numbers this morning, which was 10.1 million. It was a beat, or it was a hotter than expected number, more job openings than expected, which, coincided with the downturn because that implies positive economic news, whereas we want negative economic news, which is, I know it's absurd, but it's the way it goes. So tomorrow we'll have ADP employment numbers, which are basically a follow-up to this. That'll show how many basically jobs were added. And then we'll have unemployment rate and hourly wages on Friday, which will be very important because the unemployment rate is really that core metric that the Fed focuses on. But hourly wages equally important in my opinion, because if wage inflation is increasing, that does not show good signs for general inflation as well. So right now, what I would say is, Bitcoin, probably not the most beautiful formation in the world, but definitely think, 27.2 probably likely before a potential downturn or, reclaiming 27.2. Then I'll say Ethereum, this is, I'm not going to, it does not look beautiful, but this is a formation that you would typically long on due to the bullish divergence, as well as, the nice, sweep of this liquidity down here, as well as holding the 1 hour estimated 200 moving average. So I kind of like Ethereum for long. I think I may enter one, probably going to add that stop at 1853, and we'll reassess if it ends up going down there. But again, keep an eye on that DXY number. We got a big zoom overnight, which coincided with pretty bearish price action. So clearly this is still mucking up some of the fun. So I'm looking at ETH longs temporarily. First target 1875, and of course, you know where my stop is. So good luck, happy trading. And again, if you're not in the TTC community, that's where all of our trade ideas and information goes. This is merely just a follow-up to all of the juicy stuff in the morning. So good luck, happy trading. See everybody tomorrow.